Hello again, everyone. I'll be with you real soon. Thank you for joining us on this live stream. We'll be taking a look at a few things Gerald Celente said in his most recent Trends Journal. We'll be taking a look at the Robert Murphy interview as well as the Brett Heath interview. And we'll be taking a look at the, as Gerald Celente likes to put it, the corporate plantation, Slavelandia. So we'll be touching on how corporate, big institution, they're pretty much buying up the neighborhood. So we'll be taking a look at that, and it's pretty interesting because when that happens, the money goes back to Wall Street instead of Main Street, where mom and pop can go ahead and build their personal wealth. Instead, this money goes to Wall Street. So it's another form of wealth transfer that we're seeing. So we'll be taking a look at this. And again, thank you all for being here, and I'll be with you shortly. If you can, kindly let me know how the audio is coming in. Appreciate that, and be with you soon. Hello again, everyone. Aloha. Welcome to another edition of Silver Bullion Television, SBTV. This is our weekly live stream. And again, glad you could be here. Appreciate the time that you've taken to spend with us, whether it's evening or whether it's early Monday morning here in Asia. Let me go through a quick roll call. Tweety Bird, how are you doing? Michael Sayer, how are you doing? Frank Park, Harold B., James Richter, Frank, yes, again, Seymour Rivers, how are you doing? The Mick, great question. The Mick, that is a great question. The Mick 26. Aloha to you too. And yes, Vincent's big debut. When is that going to happen? Vincent, you're out there, right? As always, Vincent, my colleague, is here. He will be helping out with the live stream. So again, appreciate Vincent being here. Patrick Bateman, Truth Monster. Truth Monster. Interesting comment straight off the bat. America is broken. Yeah, it's either it's broken or it's flexing pretty hard there. Pretty hard there. Okay, so let me see who else is out there. 49 Fine, how you doing? Vutran, first time I've seen you here. Vutran Tom, first time. Hello. Welcome aboard. If it is your first time here, so about that, go ahead and just type in new and where you're from, and we'll see if we can acknowledge you. Thank you for being here, Vu. Appreciate it. Mr. Nguyen, again, Mr. Ref, DC Precise. I think it's the first time I've seen your name here as well. Welcome aboard. How you doing? Jay Delaney, XMD, BD, Petro, Doug Wilder. How you doing? Trev R. How you doing? Carrie Ellen Wilder. Yes. How are you doing? Let's get in that silver saddle. Absolutely. Uh, KJR Lillian Winston. How you doing? How you doing? Okay. Pinch Runner. Interesting name. Okay. Tell you what. We'll go ahead and just want to make sure I can greet as many of you as you can, or as I can. So we'll go ahead and, as always, if you are new to this channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up. Thumbs ups are always good. We really do appreciate those. And you can always find us on social media. Silverbullion.com.sg is our website. Yes, we do sell gold and silver. Yes, we do store gold and silver, perhaps in the biggest vault in the world. Perhaps. And more than that, we do specialize in wealth protection, systemic wealth protection. Again, a lot of you guys out there already know what's going on, and we are going to need options, as we always say. Shoot us an email, sales@silverbullion.com.sg, and we can go ahead and walk you through some of the options that we may have for you, including the good and favorable jurisdiction of Singapore and how that can, in many ways, help you. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL is our Twitter handle, PL for private limited. Silver Bullion SG, Instagram. We're modernizing. We're on Instagram now. Check it out. Audio versions, bit.ly, SBTV, iTunes, SBTV, Spotify, and Crisis Tracker. Again, if you have that Telegram app, whether on your mobile phone or desktop, go ahead and search Crisis Tracker. Excuse me, and this is where you will find articles that we post daily, 3 to 4 articles perhaps, as it pertains to the economy, finance, gold, silver, all those good things, all that good stuff. And we'll sift through the weeds for you so that way, hopefully, it can save you some time. And most importantly, let's find things that are that are truthful. So again, aloha, welcome one and all. Thank you for being here. Our upcoming guest, I think you guys are going to like this one. It is going to be Gerald Celente, the one and only, the developer of the global nomic methodology to identify, track, forecast, and manage trends. He is indeed a political atheist. Doesn't like either of them. Political atheist. Gotta love Gerald for that. Unencumbered by political dogma, rigid ideology, or conventional wisdom, Gerald's motto is think for yourself and observes and analyzes current events, forming future trends for what they are, not for how he wants them to be. No narrative, Gerald. He's a straight shooter. He will just tell you things the way they are. So he will be our upcoming guest. So again, I do hope you subscribe so that way we can go ahead and notify you when Gerald's interview is up. Ebook giveaway, thank you. This one, pretty interesting book. The Tyranny of the Federal Reserve by Brian O'Brien. Okay, The Tyranny of the Federal Reserve. Today, our economic imbalances are extreme and compounding and approaching a day of reckoning. This is so true. Another financial collapse looms and casts a dark shadow over our future. And under the stewardship is a very nice word, of the Federal Reserve, further hardship for our struggling middle class is certain and inevitable. So that will be our book giveaway this week, The Tyranny of the Federal Reserve. If you'd like to win that book, go ahead and download the Kindle app. It is a free app. You can go ahead and get it from your app store and be one of the first 5 to answer the question coming up correctly. Question is coming from the Brett Heath interview. Be one of the first 5 to answer it during this live stream before the timer runs out, 1 minute and 30. So be quick. And hopefully you got a good memory, better than me, and hopefully you can remember what Brett had said. U.S. winners will be given a link to download the ebook. Non-U.S. winners going to have to ask Amazon for some type of alternative prize or some type of an exchange, because Kindle, Amazon, they don't send ebooks or gifts, Kindle gift ebooks outside of the US. So just contact Amazon and they'll arrange something with you, perhaps a gift card, and provide us your email during this live stream. My colleague Vincent, he is on standby. And as the Mick 26 said, who knows, maybe we'll get him on one day. But he is on standby. What he'll do is he'll go ahead and mute your comment. Then that way you can go ahead and send us your email and only we will see it. So that way everything is nice and safe and sound. So again, good book out there. And we're going to be showing the question real soon. It is from the Brett Heath interview last week. Just let me take a quick look at some of the comments here. Jay Delaney. Yeah, Gerald, Gerald. If you know Gerald, you know Gerald. You're going to get it straight. You're going to get it straight. And it definitely should be passionate. Definitely should be passionate. So we'll see how it goes. Okay. Get the bleep button ready. Yeah. Hey, Vincent, should we just let the bleeps go by if they come along? Or are we going to have to beep them? Or will we let the bleeps pass by? So let's look for Vincent's answer. Beeps or no beeps? So having said that, let's go ahead to the question here. Question coming from the Brett Heath interview last week. For the most part, it's becoming very difficult for the large gold mining companies to replace their blank. For the most part, it's becoming very difficult for the large gold companies to replace their blank. So go ahead and give it your best shot. It's a one-word answer. One word answer. It's getting difficult for gold companies to replace their blank. Nick Nasty. No bleep. Yeah, let's see if we can do that. All right, answers coming in. Let's see. EJ Host is saying reserves. Nick Nasty is also saying reserves. DC Price, reserves. Harold B, reserve. No bleeps. Manuel De Jesus, where's everybody saying reserves? What happened here? Okay. Did everybody watch the interview here last week? Everybody's saying reserves, or did it accidentally slip out of my mouth? Because that actually is the answer. The answer is reserves. So we'll just go ahead and pass on the winners here. A Jost, Nick Nasty, DC Precise, Harold B. Let's see, and Manuel De Jesus. Those are the first five to get it. You guys got it so quick. I got to start giving you guys some harder questions here. And there you go. The answer is reserves. So again, EH Jost, Nick Nasty, DC Precise, Harold B, and Manuel De Jesus, the first five to get it. And just to make sure we all got it right, here's that interview and where Brett Heath does give the answer.
Well, it's just becoming harder to find. I think that the world has picked most of the low hanging fruit. We haven't seen a number of tier one discoveries like we saw in the previous decades, and I think it's going to continue to decrease. I mean, the overall grades of these deposits are also going down, so it's making it more expensive to mine the gold when you're moving a lot more dirt for a lot less gold. For the most part, it's becoming very difficult for the large gold mining companies to replace the reserves. So that obviously is going to have an impact on the gold price, the cost to produce it, and the overall kind of floor for where gold will be in the future.
All righty. So, Brett Heath. So this means it's going to get a bit more expensive to mine gold, let's say. So question, what happens if it simply becomes too expensive to mine gold, not as much in their reserves, and silver, of course, becomes too expensive to mine them, where the cost to mine far exceeds the spot price. And as we all know, the spot price, let's just call it the paper trading price. So because paper, let's just say paper commands or dictates maybe the price of physical gold, paper trading price. Uh, Dictates the price of physical gold. What happens when, of course, this paper price is held too low for too long? And I know we've had a very long period of sideways action where gold and silver were down for so long. Miners struggled. We saw a few mergers and acquisitions during that time frame, and gold price went up, really helped them out. I think during that time period, a lot of miners will tell you they learned how to, operate on smaller budgets. But if this should happen again, we go sideways for a long time. Cost of mining, it's higher relative to the price of spot price of gold or silver. What happens? What will happen? So let me take a look here at a few comments, or actually, I'll let you go ahead and throw in a comment or two about what you think would happen. I'll play another clip from Brett Heath. Okay, so we'll see what happens here. Brett Heath, one more time.
From an actual business perspective, for most of the mining companies, I mean, business is fantastic. It's $1,800 gold. They're making a ton of money at $1,800. So the actual core business is great. The mining industry, I believe it's one of the highest yielding industries across all sectors right now. Now, from an investment perspective, it's reaching extremes on the pessimistic bearish kind of readings across the board. There's very little appetite for any generalist to get any exposure in gold whatsoever at this point. So from a contrarian perspective, it's really the perfect storm. I mean, you've got a very solid gold price. The sector is being completely ignored. And if you think about it, just a small leg up in gold and what that will do to the profit margins of the mining companies, at least the mid-tier and the major mining companies, it's going to be just absolutely extraordinary. And that's going to translate into the royalty side as well, with all the leverage that we can give investors on our models.
All right. Precious metals, physical investors are getting pessimistic. True? Is that true? True or false? I know, we read the comments, we kind of see the sentiment, and we had that nice jump in gold and silver, and we thought we were going to turn that corner, and then all of a sudden we start running out of steam a bit. So, you think gold and silver investors are getting a little bit pessimistic? What do you think? And despite the sentiment, miners look to do well. Do you agree with that? Do you think miners will do well pretty much no matter what the sentiment? How do you think miners are going to do? Take a look at a few comments here. Sorry about that. Uh, yeah, I was quite surprised to hear that too. 40 gallons of diesel to get an ounce of gold. I didn't know it was that much. That's quite a bit of diesel out there. So that was some good info that Brett had passed along. I did not know that was the number. Take a look at a few more comments here. Yeah, Matt, MX old timer. I guess this is going to be referring to what's going on with housing, and we are going to take a look at that. And I'm pretty interested to see what the comments are going to be there. Especially with that Celente interview coming up, and how he likes to use the word slave landia and um, the plantation is how he likes to word it. So that'll be pretty interesting. But we'll get there. But before that, one more clip from Brett Heath.
Having the paper markets that are so large, it gives a lot of control over where the price goes. And so I think that's kind of what the precious metals market is dealing with right now. But one thing that I know for sure is that over the long term, nobody is big enough to fight the trend. It's just governments, very wealthy people, big funds have tried this since early civilization, obviously with much less technology. But as of right now, it still seems to be, the prices still seem to be controlled by the paper markets.
Ouch. 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 Paper markets control physical markets. A sad fact for today. How do we, and I'll say we because I'm a physical guy as well. How do we break the paper markets? Is it meant to be broken? How do we do this? Maybe do we need some type of bifurcation where, hey, if you guys want to just trade paper, go ahead and trade paper, but that paper, uh, it's a different price from physical. I don't know. Is there some type of bifurcation that needs to be done? A lot to say, a lot to do because it's not just as someone said earlier, a country broken. The whole monetary system, financial system, they, if not broken yet, cracks, deep, deep cracks and cracks from the core. And someone who does know money, Dr. Robert Murphy, a senior fellow at the Mises Institute, he joined Stephen T last week as well in an interview, and I'll play some clips from his interview. If you didn't have a chance to watch it, go ahead and take a look at it. Dr. Robert Murphy, he's one of the good guys out there. He knows what he's talking about for sure.
Historically, governments that had bimetallic standards, depending on the market ratio, either the silver or the gold coins would sort of be overvalued, and that's the one people would spend because you're getting more on the face value of the coin than the actual metal content would fetch you if you melted them down and sold it as bullion. So yeah, Gresham's law is summarizing bad money drives out good. What that's getting at is the idea that the money that's being overvalued, that's actually not as good as the law says it is, that's what everyone wants to get rid of when they spend. And people hold or hoard the money that's better than what the official law recognizes.
Okay, okay. Are you hoarding, hodling? You know, Gresham's law. It kind of makes me think about when I was a kid. And junk silver. Perhaps it relates to junk silver in some ways. I mean, how many of you guys and gals out there would empty your piggy banks as a kid? I know I did, and look for 1964 or earlier quarters and dimes and half dollars, those Kennedy half dollars, Franklin half dollars, even Walking Liberty half dollars. How many of you guys would open up that piggy bank and look for them? That was real money. Those coins were actually made up of 90% silver, as many of you know. And when we started seeing quarters that were had two colors on the side, a little bit of that silverish color, and then more of like that bronzish copperish color, we knew something was up. So even as kids, I think probably your parents, maybe your grandparents, went through those coins with you, and you took a look at what was real money, what was not, what was not real money. Things that we're using it today. Yes, stop calling it junk. I don't know why they decided to call it junk silver, because that's the real deal. That was real money. Another clip from Dr. Robert Murphy.
In terms of running the printing press, which groups would benefit? Well, the speculators, the people who are tied to Wall Street, who have very liquid funds and they earn their money through speculative investing. Those are the ones who would do well in an inflationary environment. The people who work at a coal mine or who go to a factory to make cars and they have a fixed wage that's set in a contract that maybe they get to negotiate every year, they're clearly going to be hurt by a sudden surge of unexpected inflation. These statistics aren't showing the dangers of capitalism, they're showing the dangers of fiat money.
Okay, the dangers of fiat money. Dangers of fiat money. The dangers of the printing press and unbacked money. But in an inflationary environment, how many of you guys are going to do okay? How many of you will do well? And why are you going to do well? Because I think a lot of us, we have this inflationary period that is happening now, and may get a bit deeper and worse. It's on our mind, and we're kind of wondering what to do. A lot of people wondering what to do. But if you think you're pretty sound, or you will be okay in an inflationary environment, let us know what you're doing, because a lot of people out there would also know what they should be doing. So again, comments. I'm looking at comments. Appreciate the comments that are coming in. Just want to take a look at them real quick. Let me see. Truth Monster, you put a comment out there earlier. Yeah, exactly that. 2.9 cents of copper in old pennies. I think you're looking at 1982 U.S. pennies. Those were copper. They actually hold more value, metal value, than the face value of the coin. And again, Patrick Bateman, I'll throw this back up. Hey, that's not a bad idea. Support politicians who agree gold and silver are money. That's a first step. So you guys have some really great comments out there. I'm just going through them, and yeah. Again, Murphy and the Mises Institute, they rock. Whether it's Jeff Dice or Robert Murphy, JP Cortez, who we also had on before. He has ties with the Mises Institute. Now he's with the Sound Money Defense League. These are guys you might want to know a bit more about. They are definitely on the same page with us, and it's always a good thing. Ted Butler, he does a great job as well. Maybe one day, maybe one day we'll be able to get Ted on. Maybe one day. So here's one more clip from Dr. Robert Murphy.
The same way you would understand or explain people making a barter transaction, that's the same framework that the Austrian economists use to explain where does money get its value from. So in other words, money is not some totally separate object that you need a different value system, or that you need a different theoretical mechanism to explain its value. You use the same tools that you use to explain barter. The two students at school, one has a bologna sandwich, one has a peanut butter sandwich. If they make a voluntary trade, you wouldn't say, oh, it's because the bologna sandwich was really a claim on the peanut butter sandwich. You would just say, no, they considered what they had, and they each walked away with more utility, subjectively conceived, because they had different preferences. And so likewise, when you spend $100 at the store, the merchant values the $100 bill more than the goods, and you value those goods more than the $100 bill. It's not that the money was somehow a claim.
Okay. Now, what he said, hey, it brought up an important question for me. Is it bologna or bologna? I've always kind of wondered about that, and that's my whole life. I've never figured that out. Which is it, bologna or bologna? When he said bartering with that peanut butter sandwich, is it better than peanut butter? Hey, again, your opinion there. But kidding aside, bartering is when two people decide what is a fair value to make that trade. Okay, that's really between two people. two people or more make up the marketplace. So that's what bartering is when two people decide, according to them, what's a fair value. And a lot of things, or a lot of people think that one thing is not a fair value today is your labor and time, a fair trade for fiat. Your labor and time for paper money, is that a fair trade? A lot of people will say no. Some people will say yes. It depends on how you feel about that. So I want you folks to think about that and let me know how you feel. But in the meantime, getting back to baloney and Bologna, sometimes you just get a bit confused here. So I need a little bit of help from this guy.
My baloney has a first name. It's O-S-C-A-R. My baloney has a second name. It's M-A-Y-E-R. Oh, I love to eat it every day. And if you ask me why, I'll say, 'cause Oscar Mayer has a way with B-O-L-O-G-N-A.
Oscar Mayer, the first name in Bologna.
Okay, Bologna. Bologna. There you go. Andy Lambros, if any of you were ever wondering, which I doubt, really, but if you were, he was just 4 years old when he chirped that famous Oscar Mayer song back in '74. Non-US guy, sorry, just bear with us. His success launched him into other commercials for salt and grape jelly, photographic film, potato chips, among other things. He did more than 20 commercials in all. We can't move forward without knowing whatever happened to that little guy, right? So let me take a look at a few comments here. Um, okay, yeah, my colleague Vincent throwing this one up. Great point. Takes time to unplug everyone from the matrix. It's definitely the matrix. Red pill, blue pill. It's definitely the matrix out there. An MX old timer 4. Yeah, you remember that commercial? We must be about the same age. Uh, John Bethea. Yeah, we're all about the same age, so that's good to know. Mr. Nguyen, yes, that was him. He, like the rest of us, we all aged since we saw that commercial. But again, looking at the comments here, let's see. Um, yeah, exactly. This is what I wanted to come back to this. Harold B. Junk silver is a way to buy fractional ounces. That is true because I think a lot of us were expecting gold prices to go up. We're expecting silver prices to go up. And take it a step further, when you talk about bartering and things like that, even with an ounce of silver now, even with an ounce of silver, let's say it should get to $50 an ounce, whatever it is, nominal price. I mean, let's just say it gets to $50 an ounce. And if it does get into that bartering scenario, even your 1 ounce of silver may not be able to get changed for some things. And you definitely don't want to waste your 1 ounce of silver on something you can't get changed. So that is another area where, sorry to say, junk, where let's just say real money silver has an area that it can fill. It fills that void in some way. So that's a great point there. So moving forward, I want to take a look at Gerald Celente's Trends Journal. This was last week's Trends Journal. Take a look at gold and silver, oil, Bitcoin, and unemployment. So again, this is from last week, July 27, 2021. So some things are a little bit dated now. Gold remains in its low 1800 per ounce trading range. We'll take a look at the gold price. Last week, that's where it closed up at. And fears of the Delta variant signaling more government lockdown measures. Silver, along with many commodities, took a hit, falling 2.5% to close to 24.53 per ounce. So that was last week. Gold at about 1800, silver all the way down to that mid $24 level. We'll be taking a look at the prices shortly. Oil, gamblers are betting that vax rates will offset fears that Delta variant will slow down economic growth. Gerald Celente says, thus we maintain our forecast with increasing fears that the Delta variant will sweep the globe and the growing reality that politicians will enforce more lockdowns and mandates to fight the, war 2.0. Economies will slow down. And thus there will be more supply than demand, which in turn will drive down oil prices. So Celente is looking at lower oil prices. And Bitcoin from 2 weeks ago, Bitcoin was trading in that high 29, low $30,000 range. And according to the Trends Journal, as they have been forecasting for years, the harder regulators around the world clamp down on cryptocurrencies, the lower the prices fall. And most recently, China, Thailand, Japan, and Canada had stepped up regulatory scrutiny on crypto mining and trading. But from its last week low, the volatile crypto coin spiked up more than 10,000, topping 40,000 per coin, mainly pumped up in part, according to the Trends Journal, on Elon Musk's announcement that his company holds 1.3 billion in Bitcoin. And as they went to press last week, cryptocurrency is still showing strength. One more topic from the last week's Trends Journal: unemployment. New claims for unemployment benefits jumped to 419,000 in the week ending 17 July, the highest number since 15 May, according to the U.S. Labor Department. Automakers still laying off workers as the computer chip shortage persisted, idling assembly lines, and the Wall Street Journal reported this. And the number was far above the Dow Jones estimate of 350,000 and the revised 368,000 claims filed the week before. The rising number of new claims confounded analysts who expected the number to keep falling. They were expecting jobless claims to fall amidst the tightest labor market in years in an increasingly successful vaccination program. So that was a look at Gerald Celente's Trends Journal and a revisit of our guests, Brett Heath and Dr. Robert Murphy. I hope you folks had time to go ahead and take a look at these interviews. Robert Murphy, pretty good. And again, it was a very good interview. And Brett Heath giving us some insights into the mining sector. So appreciate the two guests spending time with us. Let me take a look at a few comments here before we move on. Let's see. Harold B. I'd rather have junk silver than junk bonds. Hey, so would I. So would I. Completely agree there. What else is out there? Michael Sayer, I prefer to call it constitutional silver. Thank you for giving us another word. I'm over here doing this live stream and I'm thinking I can't call this thing junk silver. It's not junk. Constitutional silver. We'll go with that. Constitutional silver. Thank you, Mr. Sayer. Appreciate that. So let's move forward, guys. Let's just go over to our website, silverbullion.com.sg. Take a quick look at gold and silver prices currently here in Asia. This morning here in Asia. Silver 25.45, so it's about $1 up from last week, according to the Trends Journal. So nice move on silver. Gold 18.12, so still in the low $1,800 range. Nickel 19,615, getting close, inching up to that $20,000 per ton range. Again, nickel is an important component in electric vehicle batteries, very important component, and they're looking to use more and more nickel in these batteries. And I think you all know by now how electric vehicles are really starting to make a move where they are going to become more and more common. We're going to see more of them on the road. Investor Kit, free. Just go ahead and click on this. You'll see a lot of reasons why you want to take a look at silver, take a look at gold, and of course, what our company, Silver Bullion, can do for you. Again, it's all about options. Signing up for storage accounts, very simple to do. No maintenance fees or anything. We'll touch on that. P2P loans, this is interesting. We'll touch on this a bit also. Looking at the silver to gold ratio, 71.2. So we're still in that low 70 range. Would be nice to see it get back below 70. I think most of us would like to see that. And again, featured products, 1,000 ounce LBMA bars. This is, as always, one of the bigger items that seems to be on a lot of people's minds. 100 gram gold bars. These are very popular. 1 ounce gold coins, very popular as well. So let me just take a quick look here. 4 bars in the shop, which you can come down and pick up. If you are in Singapore, bring a trolley. It is heavy. 334 bars in the vault, which you can buy and own. This will be yours. It is in your name. But what you have to do is sign up as a Silver Bullion customer. Take a quick look at this. We'll just choose personal account, basic information, the country you're in, the preferred currency that you want to deal with, your name, you'll need to just fill out an application, show us some type of ID or scan some type of ID that we can see. And again, you want to click on YouTube SBTV as your reference. This helps us out quite a bit as well. And the sign up for encrypted secure notification, there are some benefits surely to that right there. But getting back to P2P or peer to peer, this is something that a lot of people are into, and they've been doing quite well, where they actually borrow against the metals that they have stored with us, or they can also lend currency or lend, yeah, let's just use currency, not money. They can go ahead and lend money to people who are using their gold and silver, platinum, palladium as collateral. So it's pretty safe. And what we do is we match the borrowers using their metal as collateral with the lenders who have extra funds and who want to return with minimal risk. So one important thing to know, owners of metal cannot lend their assets. They can only borrow against it. We don't facilitate gold leasing. Quick points: borrow against your metals in storage or lend out your funds. To borrow, again, you need to have metal with us. So it's another good reason to store with us. Make your investment work. You can go ahead and borrow against it and reinvest, perhaps in crypto if that's what you like. We saw a lot of people do that. And to lend, you just need to send money to your account, which you would open up with us. It would be a P2P or peer to peer account. You can go ahead and set your interest rates. What I'll do is let me scroll down a bit, and I'll show you like the last 10 contracts, 2nd of August, which is today. There were already 2 contracts, and they can go ahead and make them in either Singapore dollars, US dollars, or euro. Okay, so if you want to borrow in Sing, USD, or euro, you can do that. If you want to loan money in Singapore, USD, euro, you can go ahead and do that too. So this was the last 2 that came on board, and this is, oh, sorry, this is July. Let me see what happened here. Okay, this is July. Okay, so let me move back up here. Sorry about that. Let me just get to the marketplace. So what happens is, again, the 3 currencies, go ahead and choose which currency you want. And you will, for instance, see here, this person wants to borrow. He wants to make a 6-month loan. Okay. He wants to borrow 263,000 US dollars, 2635 US dollars. And he's asking if he can get it at 3.25%. Now, all these people here, they are willing to lend money. Okay, they are willing to lend. So you can see this one here, he can cover the loan already, but he wants 4.25%. But he could cover it with 277,000. So there is money here for this person to go ahead and borrow. So they'll have to work out an interest rate to where they can get a bit closer, perhaps. But what happens is, again, his loan, he wants a 6-month loan. And what happens is he uses his gold and silver as collateral. So as you can see here, he's using this 1,000 ounce bar, that 1,000, all of these 1,000 ounce bars. He's using 20 times platinum coins. So this is a tube of platinum coins. He's using all of these here as collateral. He's using 100 ounce bars. So 5 here. He's using a monster box, 500 coins there, another monster box, another monster box, another 500 ounces. So he uses these things. And then the interesting thing is, if even if I were to let's say click on it, then you can see that this really does exist. Okay, so this is his unique ID number because he owns it. This belongs to this customer who stores with us. This is his. This is how his coins are identifiable to him. It goes in this tamper evident bag. So we're looking at this here, and we can even go ahead and check the genuinity. It was tested. Okay, his results: Bullion purity 4 nines, tested with an X-ray, tested by weighing, and it was tested through ultrasound. So this is our ducts testing, the density, ultrasound, and X-ray testing. So it was tested there, and again, this is one of the items that he put up. And if you come down, I just want to show this real quick. Let me see where it is. Okay, this here, last auditor inspection, because we are audited 4 times a year. Okay, so let me just open this with Firefox here. Okay, so what this is, It is at the safe house. This was done by Bureau Veritas, who did this audit. It was inspected, issued to silver bullion. The commodity is, of course, gold, silver, platinum, palladium. Custodian is the safe house, which is the vault here in Singapore. And there are some 36,632 parcels. And again, what happens here is the silver bars and coins are located in the primary storage warehouse, which is also equipped with UL Class 1, a 2.5 ton gladiator door. Love that word, gladiator door. So this is just to say that it was audited. There's the documents to show that it was audited, it was inspected, and all containers, cages are legibly numbered, sealed with an alphanumerical wire seals with RFID security tags, and neatly stacked on the rows of steel rack. Let me see one more thing out here. Okay, so basically, it is, again, I'm just going to say it is definitely inspected, it is audited, and it is yours. You do own it. So again, contact us, sales@silverbullion.com.sg if you have any questions. Moving on to Twitter. AMLO, he's an interesting guy. Just came across this, and perhaps this is why our good friend at Arcadia Economics, Chris Marcus, he spent some time in Mexico. Mexico, they do have their own opinions about what's going on and how you should, as Celente says, think for yourself. So good on Mexico. U.S. Federal Reserve repo volume hits 1 trillion as debt ceiling looms, probably is what it is. So what happened was we saw in the reverse repo market, it hit 1 trillion, 1 trillion in a day. Okay, and as I pointed out in a tweet, it's interesting that this thing came at about the same time as this whole debt ceiling thing starts to get a bit hotter and hotter. I'll just take a quick look here at this article. U.S. from Reuters. U.S. Fed reverse repo volume hits record 1 trillion as debt ceiling looms. This happened on Friday last week. This is when we seen 1 trillion, and I'm sure a lot of people just, couldn't believe it. Volume at the U.S. Federal Reserve's reverse repurchase facility topped 1 trillion on Friday for the first time as investors and financial institutions continued to pour cash into the overnight window. Now, demand for the Fed's reverse repo facility has surged as U.S. debt ceiling looms. The Treasury Department cuts down on its bill issuance, and financial firms struggle to find places to invest their excess cash. And this is interesting because there is one place where a lot of excess is going into, and that is the housing market, which we will take a look at shortly. So moving down, Greg Hunter, Fed trying to keep economy from collapse, according to John Williams from Shadow Stats. Inflation is around 13%. That's the number he's looking at, 13%, if they use the same metrics as they did back in the 80s, I believe. Okay, so let's see. Transitory inflation is so hot, it has Saturday night fever. I don't think that's any of us dancing around there, but it is getting hot. Won't play the music. YouTube, they love to flag us for copyrighted stuff, so I'm not going to play the music to that. Tomei, no brainer. Inflation tsunami will come wave after wave. There was no discussion of inflation on FinTwit Media only 3 months ago. Now it dominates the sector every day. So again, people unwinding from the matrix. We're starting to see really what's going on. Leading U.S. bond manager says ballooning housing costs could push interest rates higher. Very true. Again, we are going to take a look at what's going on with housing. Egon von Greyers, a U.S. central bank, would represent the prostitution of our government for the advancement of the few at the expense of the many. Andrew Jackson, quoting Andrew Jackson. Lynn Alden, this was interesting here. I'll show you why in a bit. 3 weeks after this tweet from September 2019, the Fed began buying U.S. Treasuries back in October of 29, before the pandemic, months before. And nearly 2 years later, it hasn't stopped. And why I say this one is interesting is because when you take a look at this area here, okay, Now this is right before 2020. Okay, when all of this everything started breaking out, and now we're here. But when you look at this line here, it seems to be very close to the same angle here. So just to say that if 2020 did not happen, and if this line would come down, it looks like it's on the same trajectory. So if you take a look at this line here, if you take out 2020, bring this line down, and it looks like it would be about on that same trajectory. So pretty interesting, despite everything. I mean, despite if you were to take out, I should say, 2020, what happened there, this line before 2020 looks to be on about that same trajectory still. So there were a lot of things that were already broken before 2020 even came along. So interesting chart there pointed out again from Lynn Alden. Let's see, Judy Shelton, the collapse of Bretton Woods, and a look at money itself. We are getting close to Nixon closing the gold window, and we'll take a look at that maybe in a couple weeks or so. A lot of things that led up to it actually. So it wasn't just a one-off event. Hey, let's just close this gold window. There were things that led up to it. So we'll take a look at that in a couple weeks. Let's see, Walmart. Okay, you get a free $100 gift card when you get vaccinated. Okay, get a free $100 Walmart gift card when you get vaccinated. I mean, I just find it odd that, you really got to coerce people to go ahead and do this. Again, the reverse repo in that article that came out from Bloomberg, it's the timing. There's no coincidences, right? So the timing on that, pretty odd. This was an interesting article as well. We'll take a look at it as time goes on, perhaps closer to the anniversary of the Nixon of the closing of the gold window. And yeah, rocket fuel for gold, silver mining stocks. This was last week when the Fed announced that they wouldn't be really doing anything with the interest rates. So that was a look at Twitter and of course our website. I hope that there was something in there for you that you could use. Let me just click on a few things here. Okay, yeah. So I hope that was pretty something that you folks could use. Sorry about that. Appreciate you again, your patience. So, I mean, all in all, when you look at these things going on, again, the printing of money continues. We're still on that same trajectory that we were before 2020. Nothing's changed. Nothing has really changed yet. So, again, it kind of really makes you wonder what's going on. And again, got to unwind from the matrix, as my colleague Vincent likes to put it. So that was a look at Twitter, and we're going to be moving on to our topic of the day, which is corporate communities. As Gerald Celente likes to say it, the plantation, Slavelandia. Corporate is buying up homes, and you're going to pay them rent. You are going to pay them rent. It's not enough that you're already buying their goods, the food that they put out, the products, goods, services that they put out. You're also going to be paying rent to them, possibly paying rent to them. Happy about that? I'm not. So I'll give you guys a second or two to go ahead and take your high blood pressure pills and get ready for what's going to go on, because I do think a lot of us are not going to be happy with what we are going to see. So first up, the Fed keeps rates at 0.25%, and it's important. It's important because this is what's kind of leading into what's happening today. So let's just see what Big Steve had to say. Big Steve Leisman over at CNBC, and then we'll move on and kind of see how things sort of tie in together.
No change in interest rates, Tyler. The Federal Reserve keeping interest rates in the range of 0 to 1/4%. But on the issue of tapering, the Fed didn't say the words, but saying that the Fed said the economy has made progress towards the goals of substantial further progress, which is the way it assesses whether or not to eventually begin to taper. So it's made progress towards that goals, and saying it will continue to assess that progress in coming meetings. So that's the nod towards the idea that they're thinking about or still considering this idea of tapering, and they say they've made some progress. On the economy, they say the economic and employment activity have continued to strengthen. Sectors most affected by the pandemic have shown improvement, but the Fed saying those sectors are not fully recovered. Continuing the language on inflation, saying it largely reflects transitory factors. There's that word again. so give yourself a point if you were waiting on it. The path of the economy of the Federal Reserve continues to depend on the virus. Risks remain to the outlook. No change in QE policy, just to be clear. They're still going to say they're purchasing $120 billion a month, 80 of treasuries, 40 of mortgages. The decision was unanimous. The Fed saying, of course, rates will remain in the current range, that is 0 to 0.25%, until its employment and inflation goals are reached. I do want to make one note of what David Kelly had just said, this idea of would there be a nod to the Delta variant. And I can tell you that they didn't say it explicitly, but they did drop a line saying that the vaccine has reduced the spread of COVID-19. They're still up on the vaccine and said positive things about vaccinations, but they dropped that line saying that the vaccine has reduced the spread of COVID-19. Kelly?
Steve, a question on this repo facility, the standing repo facility, $500 billion. They'll take treasuries, agencies, agency MBS. What do you think the practical significance of that is?
I think they're trying to deal with the flood of cash that's in the system and sloshing around there. And it's something that's been talked about. They were planning to do this. And I can get you more details on that in just a second. But it was something that was expected because of issues that are going on with the reverse repo facilities that are out there.
Yeah, everybody's confused when it comes to that. When it comes to that reverse repo and what's going on with it. Let me just get to one question here. John Palmer, does Silver Bullion offer any physical platinum products? Only physical, and yes, platinum. We do offer platinum. Good question there. So interest rates remain unchanged at 0 to 0.25%, and there is talk of getting closer to tapering, and that'll be a different topic. We all know what happened last time they tried that. But back to that 0 to 0.25% rate. This is hurting the dream of home ownership for you and for me, and at the same time creating money-making opportunities for Wall Street. Let me show you this article here. Let me pull this up. Investment firms aren't buying all the houses, but they are buying the most important ones. This coming out in June 19th of 2021. And it is from slate.com. So let's go forward here. The median price of an American house has increased by 28% over the last 2 years as pandemic-driven demand and long-term demographic changes send buyers into crazed bidding wars. Might the fact that corporate investors snapped up 15% of U.S. homes for sale in the first quarter of this year have something to do with it? Well, the Wall Street Journal reported in April that an investment firm won a bidding war to purchase an entire neighborhood worth of single-family homes in Conroe, Texas. Part of a cycle of stories drumming up panic over Wall Street's increasing stake in residential real estate. And then came the backlash as cool-headed analysts reassured us that big investors like BlackRock remain insignificant players in the housing market compared with regular old American families. The truth is between the two. We can panic and acknowledge Wall Street's small role at the same time. Although the number of houses being purchased by mega investors is currently not enough to move the markets in most parts of the country, these firms' underlying structural advantage is profound and growing. And here's the reason why. So let's focus on Invitation Homes, a $21 billion publicly traded company that was spun off from Blackstone. Okay, spun off from Blackstone. Special purpose vehicle for Blackstone? Who knows? The world's largest private equity company back in 2017. Invitation Homes operates in 16 cities with the biggest concentration in Atlanta, where it owns 12,556 houses, though that's not much compared with the 80,000 homes sold in Atlanta each year. Invitation Homes bought 90% of the homes for sale in some zip codes. This is entire communities, cities in Atlanta in the early 2010s. While normal people typically pay a mortgage interest rate between 2% and 4% these days, Invitation Homes can borrow money for far less. it's getting billion-dollar loans at interest rates at around 1.4%. You see, when the Fed keeps that low interest rate 0 to 0.25%, the thing is, you and I, we're not in the front of the line. We're not able to, of course, we're not able to get that rate, and we're going to get it at a higher rate. But these big institutional guys, they can go ahead and get it at a lower rate than you and me. Now, in practice, this means that Invitation Homes can afford to tack on an extra $5,000 to $20,000 to the purchase price of every home, while getting the house at the same actual cost as a typical homeowner. Now, while Invitation Homes uses a mixture of debt and cash from renters and buyers or to buy houses, its offers are almost always all cash, which is a big leg up in the corporate market. All right, let me go ahead and show you this clip here.
In the United States today, hedge funds are buying up entire neighborhoods, outbidding individual buyers by sometimes up to 50% above the asking price. Long story short, families in some areas are increasingly bidding up against large institutional money. Questions are being raised for some. Is it fair for Wall Street and institutional money to distort a market like this? And how did the United States get to this point in the first place? In this episode, we'll take a look.
You are watching Cold Fusion TV.
Usually at a property auction, it's a single house that's up for grabs, but this is starting to change in some regions. Now, entire neighborhoods are being sold to companies. Recently, 124 homes in Texas were sold for a total of $32 million. The winning bid came from an online property investing platform, Fundrise LLC. The bid was 50% over the average asking price for such properties. This is a microcosm of what is becoming increasingly more common across the country. John Burns Real Estate Consulting states that there are over 200 investment firms getting in on housing. Some of these include major players like JP Morgan and BlackRock Incorporated. By the way, BlackRock controls $9 trillion worth of assets and has a stake in almost every company in the S&P 500. So it's not like BlackRock Incorporated is going to have a problem buying Grandma's house down the road. According to the New York Times, Wall Street has thrown roughly $60 billion to buy up hundreds of thousands of properties. There's also a trend of home builders selling their stock directly to investment firms. For example, the home builder Lennar Corp will construct $4 billion worth of houses and sell them to investment firms such as Allianz in a venture deal. In all of this, there is some concerns that this is pushing a housing price recovery without a home owner recovery.
Okay, now, yes, the Bank of Japan, let's expand on this a bit. Bank of Japan does the same thing where they are buying, they are into the markets buying equities. Let me back up a bit, sorry about that. Wall Street buying up homes, companies like BlackRock that do have sort of a relationship with the Fed. The relationship, remember, SPVs, special purpose vehicles, where the Fed, let's say they cannot legally buy equities, but their special purpose vehicle, SPVs, like a BlackRock, they can. And their special purpose vehicle, it is their special purpose vehicle, I should say, they were meant to go into the markets, buy up things, perhaps even pump up the equities. Now, getting back to this to expand, yes, Bank of Japan, the BOJ does the same thing, but with the BOJ, it's not hidden. See, the Bank of Japan, they do this straight up, and they do it in the open. They go ahead and buy equities, or they go into the equities markets, go ahead and buy things up, while the Fed, let's just say the Fed kind of sort of hides it by using these special purpose vehicles. And we do know that a company like BlackRock is one of them. But how did we get to a point where the average Joe is now bidding for homes with financial institutional giants?
So how did America get here in the first place? After the housing crisis of 2008, hundreds of thousands of families were losing their homes. It seemed that prices would keep dropping with no end in sight. As the years passed, the US government thought that there needed to be some intervention. In their view, there would be terrible consequences for the economy as a whole if nothing was done. The government needed more buyers, but who? Since mortgages were now hard to obtain for the average Joe, and regular Americans were scared away because of the crisis, the government thought that Wall Street would be the perfect candidate for the job. In 2012, they launched a pilot program that allowed private investors to purchase the homes of residents. Essentially, they were artificially providing demand to a market that had very little. Alright, so the problem is solved, right? The prices have stopped falling, the economy was saved, and empty houses were now being lived in. Well, not so fast. As is often the case with Wall Street, things tend to end up going a little bit too far.
Okay, I'm looking at your comments there. Yeah, I told you take your high blood pressure pill if you need one before we started, right? I did tell you that. I took mine. Anyway, greed. Greed from banks letting anyone buy a home, rolling it up into collateralized debt obligations, taking and making bets, and insuring those bets, and then putting the taxpayer on the hook. This is what we saw. This is what we saw back then. And the housing crisis of 2008 never went away. It never went away. And the Band-Aid was put over it, and we ignored the wound. We ignored it. Granted, it's years later, but that wound is reopened, or it's reopening. It's quickly starting to get infected again, and the average Joe, he's not going to have the financial health to acquire their dream of owning a home. They're going to be a renter. They are going to be a renter. You and I are going to be renters. If you don't own a home, we're going to be renters. And this is what Fed intervention in the market has done, where winners were chosen while losers, they just kept being piled up. So I'll play one more clip, and again, take your meds if you need to. So here we go, another clip.
As The Atlantic reports, between 2011 and 2017, 200,000 homes worth a combined $36 billion were bought up by some of the largest private equity groups and hedge funds. As mentioned earlier, this figure is now at $60 billion, almost doubling in 4 years. According to Dan Immergluck, a professor at the Urban Studies Institute at Georgia State University, 90% of homes in one Arizona zip code were being bought by institutional investors. Today, it's gotten to the point where institutional investors hold at least 20% of single-family rentals in some urban parts of the United States. Single-family rental homes may now be a hot new moneymaker for Wall Street, and it goes international. An investment company in Qatar and the Korea Exchange Bank are some international players that are also getting in on American housing.
Okay. So not only are home buyers bidding against Wall Street, they're now bidding against entire international institutional investors. I mean, where's this future going? I think we kind of have a good idea where it's going. Anyway, and to know the future, you have to know the past, and I'm gonna show you that in a bit. So what happens when Wall Street becomes your landlord? Well, let's take a look at this article here. This is from the Atlantic. I think it's a little bit older, but which is actually good in a way, because it kind of gives you time to see what happened when they were a landlord during that time. Yes, 2019. Okay, so in 2010, at the height of the foreclosure crisis, the federal government watched nervously as hundreds of thousands of families lost their homes, empty houses, blighted neighborhoods, their shades drawn, their yards overgrown, and without some kind of intervention, federal officials worried the housing market would continue in its free fall. Prices would keep dropping for existing homeowners, and the economic recovery, already tenuous, would be imperiled. And again, you guys know me. When anyone says recovery, I'm not exactly buying it. But let me scroll down a bit here if I can get to it. Let's see. Okay, housing trends, they were on the side of investors at the time. America was becoming a renter nation because of 2010. According to the consensus data between 2007 and 2017, United States added less than 1 million households in owner-occupied homes, but 6.5 million in renter-occupied homes. Okay, so the rental market is growing. And many families wanted to live in a spacious house in a good school district, but could no longer afford to do so as owners. And the home ownership rate bottomed out at 62.9% in 2016, down from a high of 69% in 2005. Of course, the trends that favored these new landlords were largely produced by a financial crisis that Wall Street had itself abetted. And it's interesting because Wall Street got us in this crisis, and then they get the help, and then they turn around and they start buying up our livable spaces. It's remarkable. Anyway, that some of the same investment firms that had played a part in the housing crisis were now poised to profit from it made for a dismal irony. But if the new companies could deliver on their promises of making home rentals easy, affordable, and worry free, perhaps everyone could win. The companies could return a profit, the housing market could be shored up, and houses that had lain fallow after the crash could once again be happy homes. Happy homes. And we just see home prices continue to skyrocket. But again, and we're going to touch on this also, where it is amazing that a lot of these companies got in trouble, were bailed out by the taxpayer, and then have these low interest rates. They cut in line in front of you and me, and they go ahead and now buy up livable spaces, neighborhoods, and we have to pay them rent. So, on this two-sided sword, for things we need to live, our consumables, we're buying things from these companies, and then now where we even live, we're going to have to be paying rent to these companies. Wealth transfer, somehow we're seeing wealth transfer, and I think there'll be something that'll point this out. Let me get back to these clips. Okay? So another clip here.
With global interest rates so low, investors are looking for higher yields than they can obtain in the bond market. To add to this, inflation has started to rear its head, and many investment firms see real estate as a great way to hedge against a devaluing currency. The rising cost of building materials such as steel and lumber also isn't helping. The result can end up in scenarios like the following. There are stories of first home buyers being outbid on 6 different houses, often by massive cash offers.
Okay, let me just get down. Okay, wanted to hold that up for Truth Monster there. Okay, moving on. Again, with the global interest rates so low, corporate is looking to buy up homes and rent them to you because you and I can no longer afford to buy them, especially bidding against Wall Street. And again, this is a product of Fed intervention. And couple this now with inflation and large firms where they see real estate as a financial hedge. Now, here the question that pops in my mind is that if markets get in trouble, let's just say if markets get in trouble again, the same way these institutions sold off gold, we saw that earlier in the year, right? I mean, when gold price went down, everybody was asking, why is it going down? Why is it going down? Well, because they held paper gold and they decided they needed to sell off some of these paper gold assets in order to shore up their books. So we did see how companies will sell off assets when things start to go down. But what happens when they sell off real estate assets, perhaps? Let's just say things start to go bad again, and now they own all of these homes, and they say, hey, you know what, let's sell off some of these assets here, these home assets. Well, homeowners, the mom and pop homeowner, they just might, as a result, see the value of their homes start to plummet as well. So the ripple effect of this thing can be amazing, and I don't mean amazing in a nice positive way. Let's continue with a couple more of these clips. Okay, here we go.
In contrast to private mum and dad landlords, these new corporate landlords are forced to increase returns for their shareholders. This means aggressive cost cutting and creating new penalties for renters. There have been a slew of lawsuits against corporate landlords. Unsafe living conditions, mold issues, cockroach infestations, repeated flat-out refusals to fix major issues, and unlawful evictions were all part of these lawsuits. Many said that they'd received eviction notices even though they paid their rent on time. One corporate landlord, American Homes for Rent, began billing tenants for repairs after they'd moved out. They increased their revenue from these actions by more than 1,000% between 2014 and 2018.
It's one of hundreds of complaints about American homes for rent. The company aims to please investors. What about the tenants?
Corporate office in Buckhead, where the odds of finding an unhappy tenant are good.
Are you an American Homes for Rent customer?
I am. Connor Smith says he's been through 6 property managers.
It's a lot.
And still can't get his AC repaired. He expected more from a company that's taken in millions of dollars from Wall Street investors.
As the water was coming up, I'm scooping.
Nancy Moss is another American Homes for Rent horror story. When her Lithonia home backflowed with raw sewage, and when mold started growing on the walls, her landlord blamed her.
Roughly 14 months that we were in this house, we spent 2 months in a Motel 6.
Since moving into their Canton home 3 years ago, they've had a flood. They've had mold. The latest is a $1,300 landscaping bill for grass that never grew. To keep from being evicted, the Adkins paid half.
I've paid them $74,000 over the last 3 years. And this is what we have in return.
Okay. Really, what do you folks think about that? In some cases here you have guys that are paying their rent, and it's difficult for them anyway when corporate was their landlord. I think a lot of us know with corporate, you become a number, stand in line, wait in line, or you just become a number, and you're going to be given some type of a fee or judgment, whatever it is, and unless you fight it, you're just going to have to go along with it. So here we have some people who actually try to get things corrected, and but they were just numbers, nothing more than that. Greed, as some of you folks had said out there, greed. So anyway, I'll play another clip on this. So yeah, if you need to get off the bus, maybe go ahead. Otherwise, just keep that seatbelt on, take a seat, and keep your head and arms in the window, because I know this is a lot of you guys, your blood's boiling out there, but we got to know what's going on, right? Here we go, another clip.
As this was going on, something even worse started to happen. The investment companies that were buying up these homes began to consolidate power. First, investment firms began to create companies to manage their homes. Blackstone Investments established Innovation Homes, who was backed by firms such as BlackRock and Morgan Stanley. Colony Capital created Colony American Homes, and then these companies started merging. In 2015 alone, Colony American Homes merged with Starwood Waypoint Residential Trust, who itself would merge with the BlackRock-backed Innovation Homes. American Homes for Rent, which is backed by investment firms such as Vanguard, acquired American Residential Properties in a $1.5 billion deal, and by 2017, 2 major players controlled nearly 60% of the market. As Wall Street and these investment companies continue to acquire more real estate, they're competing with real people. In some areas, such as suburban Georgia, renters say that it's difficult to find properties that aren't owned by big institutional investors. To some, it seems like families will be forced to stay in institutional rentals, and instead of building wealth, they'll continue to give money to corporations instead of what would have been traditionally private citizens. I have to be clear here. These institutional investor companies don't own enough real estate to drive up the price of American homes nationwide. But in certain particular areas, they are having a large impact. And currently today, investor sales are up 65% in Fort Walton, Florida from a year ago, and 54% in Flagstaff, Arizona, and 41% in Tulsa, Oklahoma. An increasing number of these sales are coming from Wall Street and institutional investors chasing profits, and the money that they can muster is limitless in comparison to individual families. A 2015 study found that institutional investments are likely to purchase homes in neighborhoods where, quote, fewer residents can qualify for a mortgage, end quote.
Okay, so again, these companies buy up homes. They have limitless money, and again, they are in line before you and me. That limitless money also comes, if borrowed, with a lower interest rate than you and I would ever get. And all the money goes to corporate financial institutions. Wealth grows on Wall Street, but it's not growing on Main Street. Am I right? Am I right? That's what's happening here, right? It just goes back to Wall Street. How are you feeling so far? I don't think I need to ask. I'm pretty sure I understand how all you folks are feeling. Let me go ahead to to the last clip from this series.
So the big question is, if this trend keeps going, how will this affect the housing market? Will there be an imbalance? Are there any risks to the financial system here? Before 2010, institutional landlords didn't even exist, but now they're showing up in the single-family rental market in huge numbers. So what do you guys think? On the one hand, Wall Street and institutional investment provides a pricing floor for the housing market, but on the other hand, renters may get a worse deal. If this continues, there now may be a permanent class of renters living under the ownership of Wall Street. In the future, will we look back at America and ask, did the US government facilitate a transfer of wealth from would-be homeowners to private equity firms? In a sense, this is even true today, but the question is, how far will this go?
Yes, absolutely. That's a good point there, Gelton. Transfer of wealth. I think that's a fair assessment. It's a very, very fair assessment. Again, how did this all happen? Fed intervention back in 2008, that housing crisis back then, never really recovered. I just don't like hearing that word recover. But, hearing about how corporations owning entire zip codes, it made me think of my home state, Hawaii, and the history of it back in the days of the sugar plantations. You see, sugar company owned the homes that their workers lived in, and the sugar company owned the stores that their workers bought goods in. So I guess this was somewhat similar to the mining towns of the Old West, let's say. So let me share with you, bear with me here, let me share with you a little history that, just so that we don't forget these types of things and how, we just can't allow it to be our future. So hang in there. This is a little bit about the history here with corporate ownership. Corporate-owned community, sugarcane had long been an important crop planted by the Hawaiians of old. Its sweet and nourishing sap was a favorite of chiefs and commoners alike. And the first sugar plantation came about in Koloa on the island of Kauai back in 1840. So native Hawaiians who had been accustomed to working only for their chiefs and only on a temporary basis as a labor tax, or the Aloha, naturally had difficulty in adjusting to the back-breaking work of clearing the land, digging irrigation ditches, planting, fertilizing, weeding, and all of this stuff. And even got to a point where they created the song, and the lyrics are going to seem pretty similar here. So I'll do the right-hand side, where I labored on a sugar plantation, growing sugarcane. My back ached, my sweat poured, all for nothing. I fell in debt to the plantation store. I fell in debt to the plantation store, and I remained a poor man, I decided to quit working for money to lose, far better work day by day, grow my own daily food. No more laboring so others get rich. No more laboring so others get rich. Otherwise, you just go on being a poor man. Just go on being a poor man. Now, the resistance on part of the Hawaiians to work for money when the old style of working for themselves and their families suited them better came to a head just a few years after the first sugar plantation was opened. You see, Hawaiian workers and later immigrants were being paid in scrip, paid in scrip instead of cash. Now, U.S. money at that time, remember, were gold and silver certificates redeemable for physical gold and silver. But the corporations who housed and fed and had its employees shop in their corporate general stores paid their employees in company scripts. Corporate scripts were unbacked pieces of paper. Unbacked pieces of paper, perhaps the backing was your sweat and labor that went into it. But again, nothing new under the sun. And this is how that corporate paper looked back then. You can see on the left-hand side, up and down, it says Ilima Kala. What that means is 5 money or $5. So this is what they were given in a time where there was actually gold-backed certificates. So moving forward here, in the 1880s, Hawaii was still decades away from becoming a state and would not officially become a U.S. territory until 1900. but much of its economy and the daily life of its residents were controlled by powerful U.S. based businesses, many of them large fruit and sugar plantations. And today, I call these guys big tech. You know, you have all your social media giants. But anyway, sticking to the story here, and this caused an influx of Japanese workers along with the Chinese, Filipino, Korean, Portuguese, and African American laborers that the plantation owners recruited permanently changed the face of Hawaii. So again, this is what happens when oligarchs, because this is what we're getting to in the U.S. when oligarchs start to control things. So in 1853, the indigenous population of 97% went down to 16% by 1923. In the span of about 50 years or so, there was a huge change in the demographic. The plantation area was a society unlike any that could be found in the U.S., and the islands were governed as an oligarchy. Again, it seems like what we're getting to now with all corporate and big institutional investors buying up entire zip codes. The islands were governed as an oligarchy, not a democracy, a land controlled almost exclusively by large commercial interests. In this photo here is Sanford Dole, who was a lawyer who also worked to imprison the queen at that time of a sovereign kingdom and helped to push those lands into being a U.S. territory. This is just to say, this is how much power and influence oligarchs have over our politicians. Okay. And lives were strictly controlled by the plantation owners. Each planter had a private army of European and American overseers to enforce company rules, and they imposed harsh fines or even whippings for such offenses as talking, smoking, or pausing to stretch in the fields. And workers shopped at company stores and lived in company housing, much of which was meager and unsanitary. And until 1900, plantation workers were legally bound by 3 to 5 year contracts, and deserters could be jailed. So again, this is what happens when you let a few control the many. So getting back to the big five, Nahui, Nui, Ilima. Nahui means the gang. Nui is big. Ilima is five. So the gang of the big five was the name given to a group of what started as sugarcane processing corporations that wielded considerable power in the territory of Hawaii during the early 20th century and leaned heavily towards the Hawaii Republican Party. The big five were Castle and Cook. Some of you folks might know these names. Castle and Cook, Alexander and Baldwin, C. Brewer and Company, American Factors, and Theo H. Davies. They pretty much controlled everything back at that time. And the extent of the power that the big five had was considered by some as equivalent to an oligarchy. Attorney General of Hawaii Edmund Pearson Dole, here's that name again, referring to the big five, said in 1903, this is important here, there is a government in this territory which is centralized to an extent unknown in the United States and probably almost as centralized as it was in France under Louis the 14th. So, okay, with what I just shared with you, might we find ourselves living in a company or corporate neighborhood? It's possible. It's possible in the future this may be. Is the Fed helping or hurting us? Well, we know where they help. They're definitely helping. We know this. But how far can perhaps unintended consequences go where the Fed and oligarchs can almost wipe out entire populations and change the face of a territory, zip code, state, or even nation? So let's all hope that history is not setting up to repeat itself with a central bank, central planning, and centralized oligarch control. We're already seeing our choices and options being limited, condensed, changed, and being influenced. I mean, dare I say, when corporate oligarchs buy up communities, there goes the neighborhood. There goes the neighborhood. So that will pretty much end the topic of the day. I want to know what you folks think. I mean, this is just to say that, my opinion, when you do have guys who are serving you as politicians for 10, 15, 20, 30, 40 years, whatever it is, they themselves become oligarchs. We allowed them to become oligarchs. They start to have power and control. So, again, this is something we all need to consider and understand. But anyway, let's take a look at some of the comments here. Carrie Ellen Wilder: centralized power always leads to abuse and loss of rights and dignity. True. And again, the point of this is Fed intervention and what is happening with Fed intervention and with their so-called recovery, how things are changing, how we're seeing the wealth actually transfer through the places that we live. Okay, so it's yeah, me too. Peter Schultz. Yeah, I'm numb too. MX old timer. Yeah, it is. It's unreal, really, with what's going on. Eye opener. Yes, it was for me as well. And this all started with Gerald Celente's Trends Journal when he brought out how corporate was buying up the neighborhoods, big institutional investors. It kind of made me again wonder to knowing how the past of my home state was, and seeing how you're getting paid, or at that time they were getting paid with fiat scripts, not backed with anything, when we had actually gold and silver certificates, but they were paying us with these unbacked fiat. They owned the places that we lived. We even had to buy their goods and services, in their own stores. I mean, it's one could say we're on that path again. But anyway, let's see. Let's see what we have out here. Let's see. Just want to take a look at a few more comments. Tweety Bird, yeah, absolutely. It's all about power, definitely. And but we just have to know what options we can have. How can we get through these things? And I think in the bigger picture, if we can somehow understand how we can get through it together, and we have a better chance in trying to get through it alone. But again, anyway, that's the end of the topic of the day. I just want to move to the commentary real quick. We're running a bit late. Surprised you guys are still here, but thank you. Are we headed back to the plantation? Corporate owner, oligarchs, as Gerald Celente says, Slavelandia, the plantation. They will own where we live and what we buy. So next time you hear Gerald Celente say those words, plantation and Slavelandia, he has a point. He just might be right. See, sound money equals freedom. And this is what it gets back to. Sound money equals freedom. And I say this time and time again. When a central bank is free to print money at the will of a government, and that money goes to the companies that put politicians in power and often finds its way back into politicians' pockets, we're no longer free to allow. I mean, we are allowing this oligarch class to build and develop. We're no longer free. We're going to be ruled more and more. So politicians, they have become these oligarchs and are without question part of this oligarchy system that we're seeing that, yes, they do look to centralize and consolidate as much as they can if they're allowed to. And this is a transfer of wealth. It is a transfer of wealth where money would have went to a private citizen. It now goes to Wall Street. Without question, stores of wealth, please understand that stores of wealth are going to be increasingly important as money moves in a one-way direction. And that one way is not your way. It's moving the other way. Understand what stores of wealth like gold and silver are. Understand what stores of wealth like gold and silver do. Again, things outside of the current financial system. So as money moves, we're going to need options in what stores of wealth are and even where they are located. This is important, even where they're located. Diversification, you see, it's not just about the types of assets that we go into. Diversification is also about the places or the location of where they are. And again, this is also important because for some of you who are considering storing gold and silver or assets overseas, it's important for you to understand the different jurisdictions, places like Singapore and other places, and how they can be to your advantage. So, I mean, just send us an email, sales@silverbullion.com.sg, and talk to us, and we'll see what we can do for you. So this is going to end the commentary section. Again, this topic, it does have relevance to what's going on today, especially when we talk about the wealth transfer, what's happening. and we're not necessarily seeing it happening. All we know is home prices are skyrocketing, and we may not realize, hey, I'm bidding against an institutional investor when I want to try and buy a home. My sister, real estate agent, she tells me that the asking price comes out, and within days, if even that, they're getting offered prices above the asking price, 50, 60, $70,000 above the asking price. So I mean, chances are it's probably these bigger money investors, institutional investors and whatnot, who have the deeper wallets, deeper pockets to go ahead and do these types of things. So anyway, let me take a look at a few of your comments before we head out. Again, I thank you all for being here. MX Old Timer, exactly. We're not each other's enemies. I mean, we're all in this together. You're in it with me. I'm in it with you. Guys at work, we're in it with each other here, with you as well. And we understand what's going on, which is why we took a look at things and we decided that, yes, even though we do sell gold and silver, we also need to understand that there is going to be, systemic breakdowns. And we do need to build up to have these types of options for everyone when it comes to a systemic this breakdown that's going to happen. So it's one way where we, it's not just about silver and gold for us. It's about having options for each of you out there as well. So again, I do urge you to contact us if you have questions. Absolutely, Vincent. Thank you. Sound money equals freedom. It prevents that printing press from going on. It holds government accountable. It holds politicians accountable. It doesn't put our children into debt. It doesn't allow these things to happen. Sound money. It's very, very important. It's not even so much about that. I mean, people talk about going back to a gold standard, and sure, I understand it. It's really about sound money. That's what it comes down to. So let's see. The MiG-26, is that where we're heading back to? A little bit of history repeating. Well, I mean, the first parts of it are there, where back in that time, anyway, the 1800s, where oligarchs, corporate, they owned the homes. They owned the homes that their employees lived in. So, if you're, and they had, again, the stores, just like the old mining towns, I guess. You're a miner, but you'd have to go into that company's store to buy your mining company's items. So, I mean, they're partly there, where if they own the home you live in, and you're already having to buy the things that they sell to you, maybe not necessarily that mining store, but I mean, let's just say if Walmart owns a zip code, you live in that zip code, and the biggest store in town is a Walmart. I mean, in some ways it's the same. It's about the same. So let's see what else is out there. Okay, absolutely 495. This is why we own precious metals. Absolutely, this is why you want to do it. Okay, but having said that, I mean, we can go on and on and on, but hey, you guys got work tomorrow, right? You got work tomorrow, so I don't want to keep you up too late. We'll be wrapping it up here, but again, as always, be that blessing. Be a blessing, not a burden. We all know what's going on right now. Be a blessing with your neighbor. Do you even know who your neighbor is? I mean, some of us don't, right? Be a blessing and just do the best that you can. Try and help people, try and get people to understand. This is very, very important times that we are in. So, as always, I'll see you guys next week. Saddle up for what's coming ahead. It's silver up as well. Gerald Celente. So make sure you subscribe so you'll be notified when that interview comes up. Take care, guys. See you next week.